price is the greatest tool of misdirection. And although gold has done very well over the last few months, up over almost $200 from where it was a couple of months ago, and silver done very well too. Um, in general, I don't think price gives us any indication of the level of demand. If price was an indicator of demand and of value, where the mainstream would say, hey, Andy, if gold and silver were so valuable, why in the midst of 40-year high inflation, why in the midst of a war in the Ukraine and just geopolitical and political chaos globe over, why has gold and silver not accentuated itself the way that gold bugs would assume it would? And that's a fair point. I get it. But what I would come back with, and it's hard for people to understand this unless you're digging, we have seen the greatest drawdown of physical supply from the COMEX and the London Metals Exchange that we've ever seen. We have the silver stockpiles on the London Metals Exchange, the lowest they've ever been in record, ever, since they started keeping inventory records on the London Metals Exchange. We have seen silver draw down on the COMEX, where when I say drawdown, I mean deliveries that leave the ecosystem, which I'm going to mention the significance of that in a second. Same thing with the London Metals Exchange. These were platforms that didn't traditionally entertain big deliveries, although it was something that could be done. It really never happened. In the past 18 months, we've seen a 70+% drawdown in the registered category of silver available for delivery on the COMEX market. The registered category are the bars that are available for delivery. And in February of 2021, we saw somewhere in the neighborhood of 140 million ounces, and now it's 33 or 34 million. So we've seen 100+ million ounces being delivered off of COMEX in 18 months. We've seen in one day, a month and a half ago, 45% of all of the kilo gold bars that back the mini contracts on the COMEX delivered, almost 26 million ounces in one day. We saw not too long ago, 5% of all the 100-ounce good delivery bars on COMEX delivered in one day. Who's got the kind of money to make this type of delivery? And so without getting too deep, there's two categories on the COMEX exchange. There's registered, which are bars for delivery, and eligible. Those eligible bars could be in an account like mine, or in a hedge fund, or in a family office. They're bars that are eligible, meaning they're inside the ecosystem, their weights and purity have been validated, and they're in my personal storage account, which is eligible, but it is not for delivery. Now, if I want to make it deliverable, I put it into the registered category. So in any case, when you see deliveries that are not going from registered to eligible, but from registered to God knows where, pull these bars off of the COMEX ecosystem and they leave the walls of COMEX, they now have lost a good deal of their liquidity in terms of an industrial purchaser. Now, if you've taken them outside the ecosystem, to get them back in, to get them reassayed and re-entered into the ecosystem is not only time impractical, but wholly cost impractical. And so when you see these deliveries, it's incredible. In fact, in the third quarter of 2022, we saw 400 tons of gold sent out off the COMEX market, 400 tons. And what was interesting about that 400 metric tons is that there was an article picked up recently by Bloomberg and by Reuters that said of all of these tons that were shipped, only 120 of those tons were validated. We know who bought it. The 280 or 280 tons or 2/3 of all of that gold that was shipped out, we didn't know who it was. It was unverified. And that 400 tons in the third quarter is roughly double the next biggest quarterly deliveries off of COMEX in history. It's very significant. Now, just the other day, China came out and said, we have been accumulating a whole bunch of gold. Here are our updated numbers. So now we know that these mystery buyers are those nations eastward, like the BRICS countries. And the article that Bloomberg and Reuters put out before China said, yes, we bought 40, 50 tons last month. Bloomberg surmised that it was it would be Russia, China, India, and Saudi Arabia. Now, these are the BRICS countries because, as we do know, Saudi Arabia has already applied for BRICS instatement. And look, the bottom line is simply this. I guess what I'm getting at here is this. Price has been used as a tool of misdirection because the biggest money in the world is using that price to run cover for incredibly large deliveries that are literally draining from the top on down the biggest epicenters of supply, like the London Metals Exchange, like the COMEX. The biggest money in the world always front runs what is coming. They're always in position before the little guy figures it out. And they are using price as a tool through levered futures contracts to suppress the price, to allow them the ability, without being rated or without being called out, crowded out of the trade. They are emptying the shelves globally of all of the metal from the top on down and using price as a tool of misdirection. If you see that, then nothing else matters. All of the noise, the rhetoric, and the suppression of the paper price is being betrayed by the massive acquisition. And more relevant than the massive acquisition is the pulling these huge industrial-sized gold and silver bars, which really only have tremendous liquidity within the ecosystem, pulling them out, meaning it's a one-way delivery. Leaving COMEX, they're leaving the London Metals Exchange. These bars are extremely expensive. They are only going to be accumulated by the most sophisticated buyers, and they're leaving, and they're not coming back. So to me, that is the driver. It is the movement of metal out of the system by the sophisticated investors. The rest is all just noise to me. In 2019, when the Bank of International Settlements reclassified gold as the world's only other Tier 1 reserve asset, let that sink in for a minute. Reclassified gold as the world's only other Tier 1 reserve asset next to US dollars and treasuries, the only other one. It became very obvious to me that the acquisition and repatriation of gold by the world's central banks was more significant than people were quite understanding. When we saw shortly after gold was reclassified, or shortly prior to gold being reclassified, rather, the repatriation of gold from the New York Fed and the Bank of England by the Bundesbank, by the Bank of Turkey, Hungary, Poland, the Czech National Bank, the Bank of Austria, the Dutch National Bank, they all massively repatriated their gold and then went on a buying spree. And this has continued more or less since 2017, 2018, where we've seen this huge accumulation of metal.